morning, everyone. Welcome to our monthly home buying seminar. We're so glad to have you join us this morning. There's a lot of great information that gets shared in these home buying seminars. We have a fantastic team. We have Janell McIlwain. She is our team lead. Good morning, Janell.
Good morning.
And then we have Dawn Ferguson. She's a fantastic realtor who's, let's see, Dawn, you're licensed in Maryland, D.C., and Virginia. Is that right?
Yes.
Fantastic. Fantastic. And then we have Miss Vonley Jackson. Vonley, how are you this morning?
Hello, good morning. I'm doing well. How are you?
Doing fantastic. Good to see you. Good, look at that smile there. And then, of course, we have our our guest lender this morning. And and forgive me, is it Takuma Dozier? And I hope I'm pronouncing it right.
You got it right.
All right. Well, welcome to our home buying seminar. I'm sure you're going to have some fantastic things to share, not only with our team, but those who are joining us this morning. So we definitely appreciate you taking the time and spending it with us this morning. So thank you for doing that.
Thank you, guys.
Can you introduce yourself?
Oh, and I'm Tia. I'm sorry. I almost forgot. I'm Tia Thompson, also a part of the McIlwain team here in our Waldorf location is where we're all housed. So we're just excited to have you guys join us this morning. Janell, is there anything that you wanted to add before we turn it over to Takuma?
I just want to thank everybody for joining us. Like I said, we have some awesome information we'd like to share. As you know, every month, the second Saturday of each month, we do have these home buyers seminars. They're not only for home buyers, they're for home sellers, investors. You'll get a lot of good tidbits. We also will have this posted on our YouTube channel. So if you would like to go back and review it to say if you missed something, you'll see it on our YouTube channel. We'll be happy to send you the link.
Fantastic. All right. So at this time, I think what we're going to do, we're going to go ahead and turn it over to our awesome lender. And can you just kind of give us an idea of, what's happening in the market today? I know, the market obviously shifts and changes from 3 to even to 6 months from before. So can you kind of give us an idea of what's happening out there now?
Absolutely. Before I do that, you asked me to briefly tell you guys a little bit about myself.
Sure.
So I've been with the campus group of the Mortgage Link for a little bit over a year now. I've been in the mortgage industry as a lender for about 5 years, with Capital One Bank overall about 13 years. So about 18 years of experience in lending and finance that I bring to you guys. And I appreciate you guys having me on today. Great opportunity for us to get out to our home buyers and stuff and provide them with the information that they need. So one of the questions you asked me is, what's going on in the market right now? Everybody tries to dictate what's going on in the market. You can't. I don't have a crystal ball. None of us have a crystal ball. But if we're looking more towards interest rates right now, interest rate has been on the rise since September. Actually, probably since August. But interest rates have been on the rise. Everybody got so used to the low interest rate environment that they're kind of in sticker shock with the rates and stuff that we have available right now. Since I've been in this arena for a little bit, I was able to witness the higher interest rates back in 2006 and prior, 2008 and prior, which is still lower. We're still lower now than what we were then. So we just have to put it into perspective. But the interest rates have fallen. So even though the Fed are going in and the Federal Reserve is going in and saying that they're going to raise interest rates again at the end of the year, interest rates for mortgages have fallen. Now, falling means that now they're around mid to low sixes, opposed to being in high sevens right now. And it saves clients a lot of money with that slight interest rate drop, okay? The Fed, they're not gonna be as aggressive probably the next couple of times they meet, because they're kind of meeting their point that they sit out there to meet, slowing everything down. But just because they don't go in and do stuff, there's many different factors on the back end that determines what the interest rates and things are going to be. And although they will go in and raise, we're probably going to still remain in a low sixes to mid sixes right now. Might even drop down to the high fives. Okay. The housing market overall, of course, you guys can attest to it more than I can. But there's been a steady decline in inventory that's out there. A lot of people have this myth that the higher interest rates means that the housing prices are going to go down. Not necessarily true. It might be true for most of the country, but because we are enclosed in this unique bubble called the DMV, we don't experience what the rest of the country necessarily experience. So we're kind of in a protective status inside of that bubble. So higher interest rate does not necessarily mean that the housing prices are going to fall. Low interest rate doesn't necessarily mean the housing prices are going to go up. We've witnessed that only because we were in a unique situation with COVID and everything that kind of happened. My probably advice to most people that are interested in purchasing a house is don't wait. If you wait, you might miss your opportunity. You can always get into a house, and then we can look at refinancing you later to get you that lower rate that you might be seeking. But don't wait. Like I said, nobody has a crystal ball, so there's no way for us to tell if the cost of the house is going to continue to appreciate or if it's going to depreciate. You know, there's many different factors that's going to determine that, and there's no way for us to dictate that or predict that. Okay. Couple other things with the programs and things out there that's available to clients. There's many different programs that are out there, and there's a lot of different factors that determine the program that you're in. And with me as your trusted lender, we'll review several programs whenever we go through and do any kind of discussion about how much you're going to be pre-approved for. A lot of the programs are going to be centered around your credit scores, maybe the area that you're buying in, how much money you have available to put down, whether or not we're doing any kind of down payment assistance program or not. Okay, so a lot of those different programs are going to be determined, or the program that you would, probably choose would be determined by those factors. Okay, we do have down payment assistance available through my company, which is the Mortgage Link and the Campus Group again. So we do have down payment assistance available, and we have access to those through the state, federal, and through counties here in the Maryland and Virginia area, and also with DC. We have available their down payment assistance program available as well. So we can talk about all those things.
Can you give us a little bit of information about, okay, so you have some down payment assistance programs. Can you give us some information about like the criteria for those who may be interested in those programs?
So each down payment program is going to have a different criteria, but for the vast majority of people, we'll probably use the Maryland Mortgage Program. Okay. The Maryland Mortgage Program is a state-owned program run by the state of Maryland, of course. And they have about 6 or 7 different products for down payment assistance that you can take advantage of. It will be determined, it will be dictated by your credit scores and the amount of money that you have to put down, which would depend on which program that we will probably pair you up with. You cannot own a home when you are doing the down payment assistance program. Of course, you have to be a first-time home buyer. With the down payment assistance mortgage program for state of Maryland. And the state of Maryland usually dictate the rates on those programs. And you can get anywhere from $5,000 all the way up to 6% back towards down payment and closing costs with that particular, with the state of Maryland program. We have a lot of county programs, and I always champion the Howard County program. It's probably one of the best ones out there when it comes to income-based versus how much money they'll be able to provide you towards your down payment and closing costs. They let us dictate the interest rate, and they let us use our own credit criteria. So again, each down payment assistance program is going to be different depending on which one we actually use. So if we use a county, counties have their standards. If we use the states, they have their standards. If we use a federal program, they have a different standard as well.
So
Able
we
to-
were talking about the credit. So is there a range of a credit score that someone needs to have in order to be able to be a part of the down payment assistance? I'm sorry, the down payment assistance program.
Yes, we normally ask everybody to have at least a 640 credit score, and if you're not there, we review everything in order to get you there. But the federal program allows you to go down to 620 with a set of criteria that you have to meet, but it will allow you to go down to 620 on the federal program.
What about stacking? Can you stack a county and a federal program?
Unfortunately, you cannot. The Good Neighbor Next Door, you can stack that with county programs, but majority of the time you cannot stack a state with a county program.
So a lot of times, some of the questions we get when we talk about the down payment, like people are confused about their down payment and then their closing costs. Can you break it down a little bit about the difference between your down payment and your closing costs? And then also, a lot of people don't know that they can go into like their TSP and get help for the down payment program also. So maybe talk about the different ways that people can get down payment assistance, their down payment money.
Absolutely. You know, being in this industry for, like I said, for 18 plus years, whenever you say down payment and closing costs, a lot of people get confused about it because down payment is the amount of money that you are required to put down on a particular loan. So every program wants you to have some skin in the ball game. So if we're using FHA, for example, FHA requires you to put at least 3.5% down. Okay, they want you to have skin in the ball game. The reason they want you to have skin in the ball game is an investment that you're putting your money into, and you're going to take pride in having that investment. Okay, so when we break down down payment and closing costs, the down payment is just the amount of money that you're required to put down for that particular program, whether it's 3.5% for FHA, 3, 5, 10% for conventional. The closing cost is everything that that down payment does not cover. So your settlement, your title fees, your property taxes, your homeowner's insurance, if you have mortgage insurance, and also title insurance for the owner and for the company. So all those things put together is the closing cost. So when you get that magical thing called the closing disclosure towards the end of your home buying process, we kind of put it all back together and then give you a closing cost again, even though it's including the down payment and the closing costs. And I think a lot of people get confused on that, but that was a great question, because your down payment is the amount of money that you're required to put down. The closing cost is all the money that is part of the settlement of your particular loan.
And can you explain about our VA buyers? Because what happens with our VA buyers, they just hear no down payment, but they don't understand that there's a funding fee that you can have wrapped in the loan.
Yes, so there's a couple different funding fees for veterans. So you have the first time use, and then you have your subsequent use VA buyers, and they have different funding fees. But yes, it is no down payment, but you still have to pay that funding fee. And a lot of people get confused when they go in and say, okay, well, yeah, I have a no down payment veteran loan, but that funding fee is still there for you to take care of. So most of the time, the funding fee is going to be about 2.3% of the loan amount. And you have to pay that up front.
And also what we need to remind our VA buyers also is that that's different from your earnest money deposit. So what happens is that when you put a contract on a home, although you don't have a down payment, you do have a VA funding fee that can be wrapped up in the loan, but you still have to put an earnest money deposit down when you put your contracts through.
Absolutely.
So give us some, if somebody wanted to, they're thinking about purchasing a home, they're not sure about their credit, they knew they had a little bit of credit issues before. So now what I think I'm going to do is I'm gonna go out here and try to fix my credit by myself first. Because I know once I fix my credit, then we always say that, and you can expound a little bit on there. It's like, let's let the lender look at it first. Because the lender may have some, they may have things like you think that you may be doing good and it's actually hurting your credit. So can you talk, like, for example, if I'm thinking about buying a house, so you suggest that I try to fix my credit on my own, or should I come to you first so that you can review it so you can figure it out?
I would recommend you come to me first as the lender, because we have tools available that will help you boost your credit score, or tips and tools available that will help you boost your credit scores faster. We have a designated company that we work with inside of our credit agency, which we rely on to pull credit history for clients, that will give us different scenarios so we can tell you how to best increase your credit and the fastest way for you to increase your credit as well. We're not credit experts, but we will coach you on how to increase your credit through that agency. You can also go to different websites like myfico.com. You can pull up your credit there and kind of see where you at. But if you have any questions or if you have any concerns, the best thing to do is reach out to your lender and have them walk you through that process so they can make sure you understand what you're looking at, what credit score you need to achieve to go along with your other items and stuff, as your income, your debt to income, and all that stuff kind of marries together.
Okay, so what about Credit Karma? Everybody has Credit Karma, and Credit Karma says my credit is 750.
Yeah, I don't depend on Credit Karma. Credit Karma is tailored to credit cards. All right, so anytime you get a credit card, anytime you open up a credit card, normally you get free access to Credit Karma. And a lot of people don't understand that there's about 4 to 5 different credit scores out there that's available. So you have one for a car loan, you have one for a credit card, you have one for a personal loan, and then you have one for a mortgage. And there's a couple other ones out there as well. Each one of them uses a different credit model. And a lot of people don't realize that. So I come across that all the time where people say, okay, I have a 700 credit score. And then when I actually review it for a mortgage, the credit score might come in at 640 or 650, and they're shocked because it's such a big difference between what they see on Credit Karma and what they actually have as a mortgage score. So when you go to myfico.com, you're allowed to pull up a FICO 8 score, which is a score we use for mortgages to get you approved for mortgages. And that particular score will allow you to see exactly where you at. And you will see that it's vastly different from what a credit card score is on that same website.
So one of the things you mentioned was when you talked about all the fees associated with closing costs. You said title insurance, and then there's homeowner insurance.
Yeah.
So can you talk to us about the difference between the two, and what is the purpose of the title insurance?
So the title insurance is a great question. A lot of people ask, why do they have to have title insurance? Title insurance is for the buyer's protection and also for the company that's providing loans protection as well. So I always tell people about the one scenario that I had where the client bought the house. The brother and the sister that was selling the house were going through difficulties and they were not speaking to each other. So the sister sold the house to the buyer, came back, and the brother did not want the house to be sold. And so it was an in-house battle between them. And so the client was protected at that point because they did everything that they had to do. But on the backside, the title insurance protected them because they paid for that up front. So everything had to go through the title insurance and the lawyers for the title company to protect the client. Other things that the title insurance protects you from are mechanics liens, HOAs not being paid, condo fees not being paid, and maybe the title insurance or the title company missed it. And that would prevent anybody from going after you in court for something that you didn't do, that was something that was done before you actually purchased the house.
So am I paying that title insurance as part of my mortgage, or is that just a one-time thing?
It is a one-time fee.
Gotcha.
Is there a certain percentage as far as how you will know what your owner's title insurance is? It's like a certain percentage they use as far as the sales price.
It is a percentage. It's normally about 3 to 4% of the purchase price. It could be a little bit higher depending on the area that you're in, but it's normally 3 to 4% of the purchase price.
Question for you. Is owner's title insurance something that you as the consumer can shop around for? Like
Yes.
prior to closing, I already know that the title company says, well, we can do a title insurance with this company. Is there something I can shop around for and say, no, I'm going to shop around first to see if I can get a better price?
I would recommend you go through the title company, but you do have the option of shopping around. I would just recommend you go through the title company in order to see who the title insurance companies out there that they are approved to use. But you can shop. It's always optional for the title insurance, so you can shop it around.
Okay. So we should use it from the title company, and I just want to make sure that we have this point. We should use the title insurance that we're saying that we should purchase from the title company. It's a better protection because we know that they will take everything into consideration.
Yes, you should always go through the title company, but you do have the option of shopping around, but you also should always go through the title company in order to get your title insurance.
Okay.
Okay. You asked me a question a little while ago about TSP and I missed it. And clients using a TSP or 401k, you can use the TSP and 401k as down payment, but you would definitely have to touch base with your investment firm that you have that set up with to see how much you'll be able to take out, or if you'll be able to take it out as a withdrawal or a loan. But every investment company has a different standard that they have out there in order for you to use your TSP or your 401k towards the purchase of a home.
So what if I don't have cash to purchase? But I've been working for the government for 15 years and I have 30,000 in or 100,000 in my TSP or 401k, whatever it is. Is there a limit on how much money I can take from that source, or loans or gifts from people, or do I have to have cash in hand?
You do not have to have cash in hand if you have investment products that you can withdraw from. Again, you need to see what those investment portfolios criteria are to determine how much money they'll allow you to take out. Because if you've been there for 15 years, they might let you take out a lot more than somebody that has been there for 5 years.
So it's not going to be a problem on the loan side where all that money comes from that source if I'm able to take out the maximum. Okay.
Exactly. It's not going to be a problem at all. And you can also use gifts. So your gifts normally have to come from relatives. They can come from other sources, but we can get into that on a personal level when we're on our one-on-ones and getting you pre-approved. But most of the time it has to come from mom, dad, sister, brother, brother-in-law, sister-in-law, and uncle. It's normally
there is a limit on what I can have as far as gifts, or I can get all my funds from my rich uncle?
If you have an uncle that rich, you can get all your funds from that particular uncle. You will have to have some left in reserves though, but you can get all the funds from your rich uncle that you have.
And have the rich uncle send some to me too.
So I had a question for you regarding pre-approval. So first, I just wanted to make sure. So if I'm a buyer and I'm going through the campus group to get pre-approved, would I start off the process being pre-qualified or pre-approved?
We only do pre-approvals.
Okay.
Yeah, I got out doing pre-qualified some years ago.
But what's the difference?
There's a big difference between pre-qualified and pre-approval. Pre-qualified means that you came to me and you told me that my credit score is 700. I make $100,000 a year, and I only have 2 items on my credit report. I don't look at anything. I just give it a pre-qualified letter to you based off of the information that you told me. That got us into a lot of trouble 14 years ago. Okay. So now we only issue pre-approvals. pre-approvals is that, great, you told me what you make, you told me what your credit score is, you told me how much money you have, but I need to verify that information. I need you to send me those documents. I need to be able to pull your credit report, and I need to be able to go through it with you to make sure that when you go on the contract, there are no issues, because we've gone through everything that you've told me and verified all that information to make sure that what you told me is actually correct.
So what documents would you need for the pre-approval process?
We normally just do the basic documents. So if you're a W-2 employee, we require 2 years of W-2s, 2 paycheck stubs, 2 bank statements, your ID, and then we'll have to pull your credit as well, okay? If you're self-employed, then we require 2 years of tax returns, your business license, and your ID as well in order to get you pre-approved.
Now, in reference to my bank statement, question for you. All of a sudden, I end up having, you have the 2 months bank statements, 2 months bank statements, and then you see this big deposit that I have in my account. Am I going to have to explain where that big deposit came from?
Yes, you will. Yes, you will have to explain where that big deposit came from. There are certain regulations out there that oversee those big deposits. So we have to make sure that you're getting them from receiving those funds, or you receive those funds from a source that we can actually prove. If we cannot prove where you receive those funds from, if you got $10,000 cash in the trunk of your car and you just all of a sudden deposit into your bank account, we cannot use those funds. So we have to determine where that money was generated from.
It's like the money from under the mattress.
You cannot use the money from under your mattress. Now, there are certain instances that you can, but again, that's a one-on-one type of conversation. But for the vast majority of it, we cannot use cash from under your mattress.
Now, do you look at kind of what you're speaking of that? Do you look at Cash App activity when money is being moved through that electronic function?
We do. Okay. We look at Zelle. We look at Cash App. What's the other one? That's another one out there.
Venmo, something like that.
Zelle.
We will look at those. So Cash App, Zelle, Venmo, Wise. You can move money through Robinhood. There's a bunch of different ones out there that you can move money through. But if it's a significant amount of money that you're moving through there, we're going to ask to see that transaction history. You can pull them up by going into their websites and providing us with that information. And as long as we can determine that it's coming from a viable source, we're able to use those funds.
Okay, well, I just got me a new job about 2 months ago, and I'm making all this money, and I want to buy a house. Now, I haven't had a job before then. So is my employment history, my 2 months, going to be okay? Or do I have to be working for a certain amount of time in order for you to now consider me employed?
That's a great question, because if you just finished college, we give you a grace period. You can use an offer letter and 2 paycheck stubs if it's W-2 employment. Okay, but we have to tie up that loose end. So you either have been unemployed for a while and you had a job previously, or you just got out of college and you took 3 months before you found a job. As long as we can get those transcripts and different things like that to kind of marry it up and tell a story, we can use your offer letter and 2 paychecks.
Oh, cool.
So I had a question for you, since you were mentioning an employment gap, but being in school. At what point do you find out if I have student loans outside of me just telling you that I went to school?
Well, that's part of the pre-approval process. Again, we have to pull your credit. And at that point, we'll know, what student loans you may have. The only time that a student loan would not appear is if you're still actively going to school. And I say that you did the pre-approval and then you went, 20 days later, 30 days later, and then you signed up for more classes and you signed up for additional financial aid or another student loan or something like that. It might not necessarily show up right away, but we do a supplement before we go to closing, just to make sure you haven't signed up for anything additional that might skew your debt to income ratios.
So how would it affect my chances of buying a home if I have student loans?
Great question. A lot of people are under this assumption that if they have student loans and they have it deferred, then the deferment is zero and it shouldn't be counted against them when they purchase a house. It is counted against you. Okay, there are different ratios that we use to count it against you. But right now, we can use anywhere from 0.5% of the total amount to a 4% of the total amount. So if you have a $10,000 in student loans, we use 0.5%. You're looking at about $50, $500 payment on that, $50 payment. And then if we use 1%, you lose $100 payment on $10,000.
The question is, sometimes is it true that if a person has student loans and deferred, that they can go have the student loans pulled out of deferment and get their payment plan, which sometimes is cheaper than what percentage is that the mortgage people would use?
Absolutely. But the thing with that is that you have to have made 3 consecutive payments on that payment plan. You just can't go and get a payment plan today and expect to close on a house tomorrow. You have to have 3 payments, and you can't stack the payments. And what I mean by stack the payments, you can't make a payment today, make a payment tomorrow, and then make a payment Monday of next week. It doesn't work like that. It has to be according to a standard payment plan that you would make those payments, those 3 months of payments.
Okay, well, another question. So we talked a little bit about student loans. What if I am in a, I have some taxes that I owe to either IRS or to the state. I'm gonna make I know I owe them. What would you suggest if I'm looking to buy a house? Like I owe them, but what they did was they just put a little lien against me and I'm good. I'll pay them eventually. What do you suggest for those people who have that they owe the IRS or they owe Maryland State? For example, I could go and make a payment plan, but is there a certain amount of payments that I have to make for you all to say, okay, they're good?
Great question. So on the payment plans, we're only concerned about the federal payment plan for taxes. Well, if you owe the state, you more than likely you already have a payment plan in place, or you're going to have to get a payment plan in place if you don't, and it's showing up on your credit report as a collection. But we're only concerned about the federal payment plan that you have in place. If you owe the IRS and you have not paid your balance, then you need to put a payment plan in place before you can close on a house. You can't owe the IRS and then think that you're gonna and then borrow money from the federal government. So if you owe the federal government, you can't turn around and get money from the federal government. So you have to have a payment plan in place in order to take care of that. So if you have a $5,000 bill that you haven't paid, contact the IRS and set up a payment plan to go back through your accountant or the tax person that did your taxes for you, and make sure you set up a payment plan in order to do that. And the 3-month rule follows that as well, where you have to have at least 3 payments that you've made towards that payment plan.
I like how you put that. It's like kind of like the first time I kind of heard it that way. You can't ask for the government for money and you owe the government.
Yes.
That's kind of a neat way of putting it. It's kind of the first time I heard that. So I have been through your pre-approval process and you ran my credit. Are you going to run it again before I go to settlement, or am I good?
It depends on how long it takes for you to purchase a house, right? Your credit report is good for 60 days. As long as you go on the contract within 60 days, we're good. If you go on the contract outside of those 60 days, I do have to pull your credit report again.
So, are you going to pull it like, right, for example, okay, I did it, December 1st. I'm going to settlement on December, say, 15th. Am I good where I can now go ahead and buy some stuff because you already pulled my credit and I'm good. You already got that part. So now what I'm going to do is go buy some furniture because when you buy my new house, I need some furniture and I need some other stuff. So are you going to go back and sneak and pull another credit report, or am I good to go?
I can tell you like this: that new furniture will look good in a storage unit because that's where you will have to keep it at if you go out and then you buy furniture and it messes up your debt to income ratio before you settle on your house. So no, you do not go out and start any new credit throughout the process. Okay. And if you have to start any new credit, talk to your lender first before you go out and do it, because we need to determine what that payment plan is going to look like and how it's going to reduce the amount of money that you'll be able to purchase in a house. So You always talk to your lender before you go sign up for any additional credit, but the answer will be no, do not sign up for any additional credit. But hey, people cars break down, things come up. We all have lives and stuff we have to live. Talk to your mortgage lender before you go out and do anything.
And
Okay,
it's so funny you mentioned that, because I actually had a client who had that scenario where the car broke down and they're in the middle of a pre-approval process getting ready to buy a house. And so they were getting ready to jump into buying a car. I was like, hold up, stop. I was like, don't do anything yet. I was like, please call your lender first, because you know their credit was excellent, but you know I just wanted to make sure there wasn't anything that was going to cause their pre-approval status to be in jeopardy. So that's a good point. That actually happened to a client. Unfortunately, that car was not going to hold out for the new house.
Yes.
I always say that the car people don't care about the house, but the house people care about the car.
Right.
Yes,
Mhm.
that's exactly right.
So I have a question. What about, so the rates with them, I guess at 6 or wherever they are right now, and somebody wants to lock in, they get their pre-approval and they want to lock in. How long? Because I guess that's the scary thing right now. People are thinking they're going to go even higher.
Yes.
How long can they get the approval and lock in?
We
at
can
the
lock
current
up
rate?
to we can lock up to 6 months out. Okay.
Oh,
How that works is that we charge 1% of the pre-approval amount for you to lock in that rate. Okay. As long as you don't go above that pre-approval amount, you're fine. You can purchase anything below that pre-approved amount, but you have to pay a charge of 1% up front in order to lock in that rate.
Oh, so in the event of the miracle, you're locked in for 6 months, 3 months down the line, the rate goes down. Are
Yes.
you able to take advantage of that without paying another fee, or you have to pay another fee?
Great question. You are able to take advantage of it because all of it is still a float down option. You have one float down option that's on there. So if the rates drop more than 0.25%, you're able to take advantage of a lower rate.
Okay. Great.
Good conversations.
this has been some good information. So tell us the excitement that you may have about certain mortgage programs that your bank has that makes it so that somebody would say, hey, let me get on the phone and call you. And please don't do like one person say, well, there's no difference between me and somebody else. It's like, there's gotta be a difference.
Well, a lot of the programs and things that we have available out there is, I mean, you put me on the spot when I say it's no different than anybody else, but we do have some differences in the programs. Is that we're able to give a little bit more back towards the client when they purchase FHA. We're able to actually contribute back to the client as well. For our VA clients, we contribute back to our VA clients. We give our VA clients $500 back towards their closing as well. And plus we give them a free appraisal. So you just have to give us a call and we'll talk through your scenario. But one of the things that we do is give back to the clients when they have purchased FHA, and we also will give out, a free appraisal. When I say free, of course, you as a realtor and me, we know what the word free means there, but we do give free appraisals towards FHA purchases.
Oh, wow.
That's good. That's good to know. So if someone wants to get in contact with you, what is the best way for them to get in contact with you?
I have my cell phone on me all the time. So you can call me or text me. My number is 301-273-8604. A lot of people have trouble with my name, which is Takuma, but just put the T in there and you will get me no matter what. As I always tell people, I don't care what you call me, as long as you call me, because I'm here to help you purchase a house. I've been called everything, so nothing bothers me. So just think of Lion King, and then you think of me. That's the way we go. Okay. And my email address, of course, I'll let you guys post it on the seminar. I'll let you post my email because it's quite long, but it's tdozier@themortgagelink.com. So it's a mouthful for you to go through. But like I say, just reach out to me via phone, 273-8604.
Okay, well, I can say that I've personally dealt with you on a loan where you represented the buyer and I represented the seller. But what I found was that you were very easy to deal with. And I was refreshed by the communication that you had with me as the selling side of the process. Because, you know, sometimes you have it where people just, you know, they don't communicate, they don't answer emails, they don't answer text messages. And I was really impressed. I was really impressed by that. I know your buyer. I did talk to the buyer when she came to the house, and she was really excited to have dealt with you and said that you were easy to deal with. And even when there may have been some challenges, you were able to resolve the challenges, but keep everybody informed in the process. And I do appreciate you for that. I have enjoyed this interview session. As I said before, we always like for our clients to get information, and that's what we're here about, the information. So we thank you for joining us today. Is there anything else that you'd like to talk about?
Well, I just want to thank you guys for having me. Communication is always key. So with the clients, seller agent and buyer agent, communication always key. Together, we can tackle any situation that comes up. As long as we're able to work through it, we'll have more than one happy person, two, maybe all four of us will be happy, or five of us will be happy. But we'll have many more happy home buyers that are out there. As a home buyer, I would say do not wait. Like I said, nobody has a crystal ball, but do not wait. The one thing that's out there right now, people are saying, thinking that renting is cheaper than purchasing because interest rates are higher, and that is not the case. Rent is going up as well. So a typical 3-bedroom apartment, you're probably looking at 27, 28 in most areas. Some areas looking above 3,000. That's a mortgage.
That's true.
So don't wait. Okay. Talk to your mortgage, talk to your realtor, talk to your mortgage lender. Make sure you understand what you can buy and what you're looking at before you just determine that this is not the right time for you to buy.
That's true. Well, as I said before, we thank you for joining us. You know, we had a wealth of information that we're so glad that we were able to share with our guests. You've given us the contact information. We also will have that put in the chat details and along with the thread. So if anybody wants to get back and re-listen to some of the details of this interview, it's going to be on our YouTube channel. I'm Janell McIlwain with the Samson team. We have Don Ferguson, Bonnie Jackson, Tia Thompson, and Tacoma Dozier. Okay, our lender for this month. Thank you all so much for joining us, and we look forward to doing business with you.
Thank you guys so much. Have a great rest of your weekend.
Oh, Esau, bye. Thank you.